Hi all, this is Pawan Srinivas again, back with a new concept of financial accounting, and today we are going to speak about introduction of financial accounting. When we basically speak as an introduction or about financial accounting, we should know something has levied as a foundation for accounting, and that will be bookkeeping. So one of the famous accountant, A.H. Rosenkamp, has defined bookkeeping as an art of recording of business transaction in a systematic manner. So how did accounting evolve? Basically, there was a transactions in the ancient days or in the historical days that were recorded to note down that what are the expenses, what are the incomes that we have received. And we do this bookkeeping even in our daily lives. For example, if a mother goes with 1,000 rupees with her wallet, go to the market and buy some groceries and vegetables, she comes back home and just writes what's been purchased, how much is left over. That is bookkeeping. And she doesn't do it in a systematic manner as accounting does, but that is how bookkeeping existed. That is how the foundation of accounts has been levied. So moving on, it is clear that the recording of business transaction in the books of accounts and in accordance to the principles of accountancy. And bookkeeping as a foundation is now talking about accountancy. So what is accountancy? An accountancy is a science prescribing the principles or rules governing, recording, summarizing, and analyzing the business transactions. So accountancy is a science, basically a science. It's not a peculiar science or a normal science where H2O, hydrogen 2 molecules, and oxygen 1 molecule will comprise water. No. And accountancy is a science in its own way which prescribes the principles, rules, and that governing this recording and summarizing and analyzing of business transactions. So Eric Kohler and another accountant defines accountancy as a theory and practice of accounting. And now Eric Kohler is actually taking or diverting or interlinking a topic called accounting. And what is accounting? We'll see further. And henceforth, accountancy is a discipline which explains the art and principles of recording business transactions. So this is how it has been related. Bookkeeping is an art of recording business transactions, wherein accountancy is a systematic way of or governance to record the business transactions. It's basically a science. So in the previous slide, Eric Kohler said that accountancy is a theory and practice of accounting. And what is accounting? Here's the meaning. So American Institute of Certified Public Accountants has defined accounting as the art of recording, classifying, summarizing in a significant manner and in terms of money, transactions and events which are in part, at least, of a financial character and interpreting the results thereof. So when I briefly look at it, it's an art of classifying, recording and classifying. Recording the transaction comes into place. If it is a cash, if it's a credit. So that kind of classification has to be done. Accounting involves various accounts in the format of T, which will be explained in the further sessions. And summarizing it. How do we summarize? Prepare a trial balance. So that's again will be explained in the future sessions. And in a significant manner, in terms of money, measurable in terms of money, be it a credit or cash. So it should be measurable in terms of money, and transactions and events which are in part, at least, of a financial character. Any transactions or any events which will lead to a financial impact, if not fully or at least a part of it. And ultimately, interpreting the results of at the end. So after recording, classifying and summarizing the accounts and transactions, there will be a conclusion drawn in the form of financial statements, and financial statements normally comprises profit and loss account and balance sheet. And in terms of manufacturing industries, or in terms of NGOs or non-profit oriented organizations, there will be revenue and expenditure account in place of profit and loss account and balance sheet. So hence, accounting is identifying and measuring the business transaction in terms of money alone. It should be measurable in terms of money. Recording those business transactions in the books of accounts, classifying those business transactions into the proper accounts, proper segments, summarizing those transactions. As I told, trial balance is a kind of a summary which consists of all the closure balances of accounts, of various accounts in one sheet. That is trial balance, and analyzing and interpreting the results thereof. Once trial balance is prepared, then comes financial statements of profit and loss account, classifying all the direct expenses, all the indirect expenses, interpreting what is the net profit or what is the net loss, and then measuring what is the current status of a company in a sheet called balance sheet, and communicating the results to the end users. When I say end users may be company, the shareholders, the stakeholders, the public, the financial institutes which lend the money, or the debenture holders who actually want to contribute towards the assets of the company or to the investments of the company, and so on. So accounting, as I told, we started with bookkeeping, and then we moved to accountancy, and then we moved to accounting. And on what basis the accounting is done? So the basis of accounting on which the transactions are recorded is called as basis of accounting. And there are three bases of accounting. One is cash basis, and the other one is mercantile or accrual basis, and the mixed or hybrid basis. So the cash basis is nothing but the cash transactions as and when it happens, as and when the cash is received, as and when the cash is paid, irrespective of its accrual, irrespective of what's happening, is recorded, is accounted. So that is cash basis of accounting. So what is mercantile or accrual basis of accounting? Whether the cash is received or not, whether the cash is paid or not, the moment it becomes due is recorded. So as an example, your rent of the house gets accumulated or accrued on the last day of the month, for example, and your payment date may be the 2nd of next month. So in that way, rent is accrued, and that is recorded in your books of accounts, whether it is paid or not. And the third segment is mixed or hybrid basis of accounting. And a mixed or hybrid basis of accounting, it's a combination of cash basis and mercantile basis. In this system of accounting, or in this basis of accounting, the incomes are recorded as in when it is received. However, expenses are recorded on an accrual basis, as in when it occurs, whether the cash is paid or not, but it is recorded in the books of accounts. So in accounting, there are systems of accounting. In the previous session which I conducted about auditing, I specifically mentioned there is something called double entry system of accounting, and it was invented or brought up by a French mathematician in 1494. And the French mathematician name was Luca Pacioli. And the systems of accounting are majorly classified as single entry system of accounting and double entry system of accounting. When I gave an example about bookkeeping, that your mother writes all the entries, that how much she has expended, that is typically a single entry system of accounting. She doesn't give an impact on the other end, that the vendors who supplied the vegetables, the vendor who gave an onion, the vendor who gave an tomato, the vendor who gave beans, she doesn't give an impact what has been created as an equal impact to the other person. She just records what was the impact of her transactions to her goal. But the double entry system is not as such. If she has purchased a vegetable from one vendor, she will go ahead and pass the necessary entry in both the books of accounts, which will create a balance, a level of transaction. And double entry system basically says as a rule of thumb that every debit will have a corresponding credit and every credit will have a corresponding debit. So in that way, double entry system is a system of making two entries in two different accounts. So what is accounting cycle? How does accounting get into picture? How does accounting draw a conclusion about a firm or a company or any sole proprietor concern? Is there is a business transaction, and that business transaction will be first entered into the books of original accounts called as journal book or a subsidiary book. What is journal? What is subsidiary book? That will be explained in the further chapters. And then passing the journal entries to the ledger, transferring, or it is called as posting the ledger entries from the journal. And the number of accounts are involved in the bookkeeping. In a firm, in an organization, will have any number of accounts. All those accounts closure balances will be taken and put in a sheet listing out the debit and credit balances of it. And that forms a sheet called trial balance sheet. With the help of trial balance, there will be a profit and loss account created, and from the profit and loss account deriving the net profit or net loss, there derives by capitalizing the assets, mentioning the liabilities, what are the assets of the company, what are the liabilities of the company. There draws a balance sheet where we will get to know what is the current situation of a company. How to analyze the balance sheet, how to prepare the profit and loss account, everything will be demonstrated in the further sessions conducted by Commerce Studies Zone. And once the balance sheet is ready, that doesn't mean that that is an end of a financial accounting. No. Again, a firm will have its own transaction happening. It's all repetitive in nature, recurring in nature. And then again, business transactions will be entered into journal. From journal, it will be posted to ledger. Then again, extracting the balances of the closure balances of the accounts into the trial balance, posting and then putting it in a profit and loss account, and then preparing a balance sheet. So this is an accounting cycle. So I hope this session was helpful for you guys in understanding what is the introduction of accounting and what is bookkeeping, what is accounting, what is accountancy, what are the bases of accounting, and you also know accounting cycle now. So please feel free to drop your feedback at commercestudieszone121@gmail.com. Thank you.